Can you deduct startup costs as business expenses? Imagine launching a new business and wondering which expenses you can write off on your taxes. It's a common question for many self-employed and gig economy workers. The good news is, yes, you can deduct startup costs as business expenses. But there are some rules to keep in mind. The IRS considers startup costs as expenses you pay before your business officially begins operating. These are different from ongoing expenses like rent or supplies once your business is up and running. Startup costs include things like market research to see if your idea will work, advertising to promote your launch, and training employees before opening day. If you hire a professional like an accountant or lawyer to help set up your business, those fees count too. Even travel expenses to meet with suppliers or potential clients before starting are considered startup costs. If you register your business with the state or pay legal fees to form your company, those are included as well. You can deduct up to $5,000 of startup costs in your first year of business. But if your total startup costs are more than $50,000, that deduction starts to decrease. For every dollar over $50,000, your first-year deduction drops by $1. If your startup costs reach $55,000 or more, you cannot deduct any startup costs in the first year. Any costs you cannot deduct immediately are spread out over 15 years. This process is called amortization. You will report these costs each year on your tax return using Form 4562. To make sure you get the maximum deduction, keep detailed records of all your expenses. Save receipts, invoices, and bank statements. This helps prove your costs if the IRS asks for proof later on. For Asian American entrepreneurs, especially those starting small or working in the gig economy, understanding these rules can save you money. Keeping organized records from the beginning makes claiming deductions easier and more accurate. If you're unsure whether a cost qualifies, it's a good idea to talk with a tax professional familiar with small business and self-employment taxes. In short, startup costs are deductible, but only up to $5,000 in the first year. The rest can be spread out over 15 years through amortization. Staying organized and knowing the rules helps you lower your tax bill and get your new business off to a strong start.